Wall Street closes higher for the second straight session. Tech outperforms in a broad-based rally after Fed Chair Jerome Powell's largely positive growth commentary at the Jackson Hole Summit on Friday. Asian markets trade higher on positive cues from Wall Street. The GIFT Nifty is also implying a higher start for the Indian market. Brent crude sees range trained around $84 a barrel as fears of rate hikes denting demand and potential supply disruptions due to a storm off the U.S. Gulf Coast keeps prices in check. The government says that 58 companies, including major laptop companies, have applied for the revised IT hardware PLI scheme. Add that August 31 deadline will not be extended. The deadline for the 17,000 crore financial incentive scheme was extended in July. U.S. Commerce Secretary meets her Chinese counterpart in Beijing. The two countries agree on steps to improve trade with open and practical communication. They also say it is profoundly important for both countries to build a stable economic relationship. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. Well, those are the top headlines. We'll talk about them in greater detail. But as always, let's take a look at what the global markets and first up, what the Asian markets are doing. It's a green handover that they've got from the Wall Street, and that was led by the IT sector. And today, if we look at the Asian markets, largely higher. Hang Seng actually continuing that rally. It was up around 2% yesterday, up another 1% in trade today. The Taiwanese index is up 0.3%. And across the board, barring the Shanghai markets, it's a green-looking Asian screen. The Kospi is up 0.3% as well. Nikkei too higher by 0.3%. So the growth outlook at the Jackson Hole Summit is something which is keeping the markets upbeat. And GIFT Nifty, that'll come up for you on the screen because that's implying an open again in the green. Though on the lower side, it's a 15-point uptick that the GIFT Nifty is indicating if we compare it with the Nifty futures. So that's what's happening in the Asian markets. A good-looking screen there. But let's listen into what Stephen Roach, former Morgan Stanley Asia chairman, had to say about the state of the Chinese economy and the debt risks it is facing.
Debt intensity of the Chinese economy has exploded. It was about 300% of GDP at the end of last year, up 100 percentage points of GDP since Xi Jinping took over. And they're mindful, and they've been talking the talk, but not really acting on it since 2016 about Japan-style risks. And, they're right in the sweet spot of going much, much too far on binging out on debt.
Okay, that is some opinion coming in from experts, but let's talk about the U.S. markets now. Key Wall Street indices ended higher with the S&P 500 and the Dow Jones gaining 0.6% and the tech-heavy Nasdaq climbing over 100 points. Remember, the broad-based rally comes at the end of a month of losses. All three indices have lost 2.8 to 4.5% so far in August. This week, investors will look ahead to key data on GDP, job openings and consumer confidence as well. On that note, let's listen in to Mohammed Al-Arian, Alliance's chief economic advisor, talking about Fed Chair Powell's latest commentary and also the inflation outlook and more.
That's what Powell did, and it actually came as good news to the markets, is he didn't say anything new. He maintained maximum policy optionality, and the market liked that because there was some concern that he may go and start talking about this R-star, longer-term issues, which actually are uncertain for markets. What's really interesting is the two things he did say about the longer term. One is, and we have played it on the air, inflation, the target is and will remain 2%, very controversial. And second, that we are operating under the stars, but it's a cloudy sky. Right? These two things are really meaningful because away from him, and unfortunately there's enough coverage, there was a lot of discussion about how the global economy is changing, how supply side issues are becoming more important, and what does that mean for monetary policy?
Okay, all right. That's the inflation outlook going forward in the U.S. But now let's get you the final update on our global market wrap this morning. Sharp gains in Europe on Monday with both the French CAC and the German DAX closing over 1% higher. The British FTSE was shut for a public holiday. The Stoxx 600 clocked its best one-day performance in a month, closing with a near 1% gain led by technology stocks. Shares of European companies with significant exposure to China rose after Beijing halved stamp duty on stock trades. Okay, that's the global market action. Good looking screen, at least for the bulls this morning. But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. All about the market setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Rima, let me come across to you first up. Looking like a green screen for our own markets as well.
Yes, it's looking like a green screen, but it looked like a very green screen even yesterday. If you remember, when we started trade yesterday, all the global cues were positive, yet the markets couldn't quite. I mean, we ended in the green and there was gain and the Nifty was above 19,300, but it's still not, kind of a roaring session. So all in all, markets continue to consolidate. Now, the key that's emerged is this 19,200 to 19,300 has emerged as a very strong support for our market. Over the last 10 days, the Nifty has taken support somewhere around these levels, between 19,229, which was, I think, the Friday's intraday low, and about 19,300, 5 times out of the last 10 trading sessions. Yesterday as well, the low was 19,250. So consolidation continues. This week, we are awaiting important data. The domestic Q1 GDP print is tomorrow, the August series expiry on Thursday. On Friday, we've got the August auto sales numbers. So this will also dominate sentiment, and keep your eye out on the rainfall. August has been quite the deficit. DIIs yesterday net bought 1,264 crore in cash, while the FI sold 1,393 crore in the cash market. The global markets are fairly upbeat. US markets, as you pointed out, ending with the session with gains of about 0.6 to 0.8%. The dollar index, by the way, has dipped below 104. The yield too has cooled off. If you remember last week, the US 10-year yield had gone up to levels of 4.35. Yesterday, it was below 4.2. So there has been a considerable cool off in the US 10-year yield, even as Brent crude continues to hover around 84. So all in all, the cues point that it could be another session of consolidation for our markets. Back to you.
Okay, all right. A consolidation phase for our markets. Thank you so much, Rima, for all those cues. But a lot of stocks that will be on our radar as well. Surbi has that list. Hey, Surbi, morning.
Good morning. So first on my list is Gokaldas Exports. Now the company is going to acquire a UAE-based manufacturing apparel manufacturing company, Atraco, for $55 million. This acquisition will be funded by a mix of debt and internal accruals. NBCC, the company gets a work order worth 66 crores from the Indian Medical Association. SVJN, the company's arm, gets a letter of acceptance from the Assam Power Development Corporation for 3 solar power projects. PG Electroplast, the company launches the QIP to raise 500 crores. The floor price is 1641 rupees per share. And Sun Pharma, in its AGM, reiterated the FY24 outlook. They expect a high single-digit top-line growth for FY24, and they expect their R&D spends to be around 7 to 8% of their FY24 sales.
Right, a lot of stocks that will be on our radar, but let's talk about all the cues from the F&O space as well. Mangnam is joining us now. Hey, Mangnam.
Good morning. So, while we are in a bit of a range and the start is likely to be positive, the question is whether we go past that congestion zone of 19,350 to 19,400 on the Nifty as well. Because yesterday, things were looking good, but, the day's high was 19,366. And we retraced from closer to the 50-day moving average mark of 19,387 itself. Now, whatever be the reasons, the second half yesterday was marred by a decline that we saw in Reliance. That was a big event to watch out for. So if you just take a look at the intraday chart of both the Nifty as well as the Reliance stock, you would see that they were mirroring each other, specifically in the second half of trade itself. That's not all. The Nifty Bank, that's the one that we have to watch out for, was outperforming in yesterday's trading session. So that's about Nifty and Reliance. But Nifty Bank, the close was 44,495. It's very close to its 20-day moving average. So for all practical purposes, opens at the 20-day moving average. The question is whether it goes all the way up to its 50-day moving average, which is 44,750 or not. The FIIs bought in index futures. So the Nifty futures discount turned into a premium of 15 points. They added 15,000 long contracts and close to around 7,400 short contracts itself. So in effect, adding 2 long contracts per short contract, as a result of which long exposure has inched mildly higher from 40% to 43% itself. The big positive, however, was the writing that we saw in index puts. Remember, this is the expiry week, and FI wrote 4 times the puts that they wrote calls, so telling you that even as there is congestion on the way up, there is strong support. What was the put that was written? 19,300 put was extremely active. We saw the put call ratio move closer to 1 as well. So for a premium of 60 odd rupees, telling you that there is support at close to around 19,250 odd itself. On the way up, however, call writers are still active at 19,350. That's telling you that there would be resistance again between that 19,350 to 19,400 zone. So those are both the active options. Nifty support has moved between 19,200 to 19,250 itself. The other important cue to watch out for today will be, it's Tuesday, it's weekly expiry for the financial services index. And out there, support is closer to where it is right now, 19,700, and the 19,900 call is extremely active. So if it sustains above 19,800 for a bit, we can see some short covering there.
Okay, all right. Thank you so much for that, Mangalam, Surbhi and Reema, for prepping us up for this trading day ahead. Time for a short break now. When we return, the government says that 58 companies, including all major laptop companies, have applied for the revised IT hardware PLI scheme. Add that there won't be any more extension to August 31st deadline. More on that on the other side. Stay tuned. Welcome back. You're still tuned in to Power Breakfast on CNBC-TV18. Well, the reworked 17,000 crore rupee production-linked incentive scheme for the IT hardware has seen better than expected response, with the government saying it has received 58 applications from both domestic and international manufacturers. CNBC-TV18's Ashmit Kumar reports on the carrot and stick method the government used to push its Make in India aspirations.
Well, the government's PLI push for electronics manufacturing has yielded results for mobile manufacturing. But the mobile story has not been replicated for other consumer electronics like laptops, tablets, as well as PCs. Now, the government sought to correct this anomaly by boosting the PLI for IT hardware. Version 2.0 saw the incentive more than double to 17,000 crore rupees. A total of 58 applications from players, both domestic and international, have come in, and the government is enthused by the response. We learned that given the response, the government does not plan to extend the deadline beyond 31st of August. And the process for approval of these applications will begin in September. One reason for this enthusiastic response, the government officials believe, is its decision to restrict the import of laptops, tablets and PCs under the normal route. The move may have stemmed from the lackluster response that was received to the original PLI, did not find many takers, but this move sparked such an apprehension so strong that the DGFT had to come out with another notification, a second one, within 24 hours, postponing the restrictions till the 1st of November. It also began engaging with the industry to explain the rationale.
From the get-go, I think this was communicated incorrectly. This is not about import restrictions at all. So this is really an import management framework.
Okay.
We want to be very careful about what is the hardware coming, where is it coming from. We want to be clear that we want more and more trusted hardware. This is not some hathoda way of making people manufacture in India. I can assure you that.
The move also echoed with trade partners. U.S. Trade Representative Catherine Tai met Commerce Minister Piyush Goyal to convey the USA's concerns. A formal statement after the meet says, and I quote, she noted that there were stakeholders that needed an opportunity to review and provide input to ensure that the policy, if implemented, does not have an adverse impact on U.S. exports to India. Ambassador Tai and Minister Goyal agreed to explore this issue further and find a solution that addresses both countries' concerns. End quote. Eric Garcetti, the U.S. ambassador to India, also voiced his concerns.
We're absolutely engaged. And first and foremost, since we're friends, we want to listen. Where are you trying to go with this policy, and how can we get there together? It's a tax on doing business, potentially, in India, and we want to make sure that there's nothing that holds back American investment here in India to create jobs here in India, and vice versa.
58 leading companies have registered under the PLI scheme, including Dell and HP. But this does not mean that the industry has stopped being concerned. It still believes that the government should provide a 6 to 9 month window to migrate to the new regime. In New Delhi, Ashmit Kumar.
Okay, that's an interesting report by Ashmit. So that is something that we'll be watching out for closely as well. Now, the next generation has been inducted into the board of Reliance Industries, but Mukesh Ambani will remain its chairman for the next 5 years. Those are some of the big announcements from the Reliance's annual general meeting. In a 2-hour-long speech, several launches like Jio Air Fiber and a fixed wireless broadband service were also announced. The Reliance CMD expects the retail arm to be the fastest growing business in the group in terms of revenue. This business is valued at more than $100 billion today and continues to see interest from marquee investors, Mukesh Ambani said. Here are the highlights from the big event yesterday.
I am supremely confident that the value that your company will create for all its stakeholders over the next decade will be multiple times greater than what it has generated over the past 45 years. With a heart overflowing with happiness, I welcome Isha, Akash and Anant to the Reliance board. And I call upon all of you, my dear shareholders, to extend your blessings and best wishes to Isha, Akash and Anant. Jio Air Fiber uses our pan-India 5G network and advanced wireless technologies to bypass the need for last-mile fiber. With Jio Air Fiber, we can supercharge this expansion with up to 150,000 connections per day. This is a 10-fold increase, expanding our addressable market over the next 3 years to over 200 million high-paying homes and premises. And through fixed mobile convergence, we can foster greater engagement and loyalty among Indian households, especially premium households. I am delighted to announce that Jio Air Fiber will launch on the auspicious occasion of Ganesh Chaturthi on 19th September. We stand committed to create up to 2,000 megawatts of AI-ready computing capacity across both cloud and edge locations. And we will do this while adopting sustainable practices and a greener future. Over the next 5 years, we plan to shift most of our energy footprint in connectivity and digital services to green energy, which is not just eco-friendly, but also lower cost. Here is my promise to our countrymen. 7 years ago, Jio promised broadband connectivity to everyone, everywhere. We have delivered. Today, Jio promises AI to everyone, everywhere.
Okay, those are the big updates, but of course the standard disclaimer for you on the screen. Network 18 and TV18, the companies that operate CNBC-TV18, are controlled by Independent Media Trust, of which Reliance Industries is the beneficiary, and Reliance Industries, the promoter of Reliance Jio, also controls Network 18, which owns CNBC-TV18. Okay, let's move on now to some news from the aviation sector. A positive development at cash-strapped airline Go First ahead of the upcoming festive season. As sources tell CNBC-TV18, the airline has credited salaries in full for its employees for the month of June. The payments were made following urgent infusion from lenders. Now remember, the airline had secured priority funding of 100 crore rupees earlier to meet its immediate expenses. Go First was to use the funds to pay for parking and airport costs, employee salaries, besides insurance and maintenance and statutory dues as well. Okay, all right. On that note, we'll slip into another break. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. Well, we spoke about the equity markets and macros as well. It's time to know all about the commodities. Manisha Gupta is joining us as always to tell us more about that. Hey, Manisha, good morning.
Hey, morning. Thank you for that. Well, we're looking at a lot of data coming out in this week. Today, you have the U.S. consumer confidence numbers coming in, and then the China PMI comes in on Thursday. So investors really seem to be shying away from the big bets ahead of the U.S. and China key economic data. On Friday, you also have the U.S. non-farm payroll data. So ahead of that, there is a bit of a profit-taking that we've seen in dollar index. But even despite that, there's not so much of strength that the crude prices have been able to exhibit. Remember, last 2 weeks, we've seen the crude prices trade in the negative, and this week doesn't look so different, because we seem to be having difficulty holding around that $80 a barrel mark for the WTI crude prices. The only thing that seems to be supporting markets really is the tropical storm Idalia, which is seen potentially disrupting the U.S. supplies. It is expected to strengthen by Wednesday, make a landfall on Thursday around Gulf of Mexico. That is where 1/6 of crude in U.S. is produced. So ahead of that, there is some longs that seem to be getting created in case of crude prices.
Okay, all right. Thank you so much for getting us all those updates, Manisha. So that's what's happening in the commodity markets. Let's move on now and talk about some global news and get you updates from the U.S. Commerce Secretary's visit to China. The two countries have agreed to establish a new working group to seek solutions on trade and investment issues. CNBC's Sam Vedas gets us up to speed on the key takeaways from the first day of the visit. Sam.
They've agreed to continue to hold talks around trade and investment. So they're setting up a working group now on their commercial issues. As I said, it has been met with some criticism from some Republican lawmakers who do feel that they are concerned that this could lead perhaps to more concessions. However, Raimondo is saying that she had met with more than 100 businesses and seems to be delivering on that. She said this is largely about reducing misunderstanding and misconceptions about U.S. national security. She said that's not up for debate, not up for negotiation, but also to be more transparent with China on these export controls. Have a listen to some of the details.
First, we agreed to establish a new commercial issues working group, a formal working group, which will involve U.S. and Chinese government officials, and very importantly, U.S. and Chinese commercial private sector representatives, as we seek solutions on trade and investment issues and to advance U.S. commercial interests in China.
The working group meetings will be held twice a year at a vice ministerial level. The first will be in early 2024 in the US, but the discussions on export controls will be at an assistant secretarial level and actually will start in Beijing today. Now, they also agreed that the commerce ministers will meet at least once a year. So Raimondo, of course, meeting with Wang Wentao for the second time this year over in Beijing. They did have a very frank and pragmatic conversation. Gina Raimondo, of course, raising the concerns around Intel and Micron, China raising their concerns about tariffs, chips, and also these investment curbs. They also talked about China's recent export controls on gallium and germanium, but certainly they do seem to have a willingness on both sides to try to stabilize this relationship. As far as what China thinks about all of this, it's interesting. There's not a huge amount of commentary in Chinese state media today. However, you do very much get the sense from some of the commentary that we are seeing that while China does see these working groups and this continued engagement as a sign of goodwill, there is still a degree of skepticism. They do really want to see more concrete steps to stabilize the relationship.
Okay, this is an important global event to track. We'll keep getting you updates on this one as and when we get them. For now, we'll take your leave on this edition of Power Breakfast, but stay tuned. All the market action on Bazaar Morning Call, that comes up next.